Okay, welcome everybody to another session of Behind the Biz. We have with us here today Dr. Ken, founder, group CEO of Hibiscus Petroleum. Berhad. They are listed on Bursa Malaysia, and I can say they are the only pure upstream play oil and gas service provider or upstream oil and gas. That's it, right?
E&P player. We're an E&P player.
E&P, pure play
Pure
E&P.
E&P, exploration and production. player.
Exploration and production
Yeah.
on Bursa, Malaysia. A lot of our viewers always get confused because there are a few Petronas that's listed, but they're not upstream, right? So you are the only upstream. That means you are the guys that actually pull the...
We are on the coal. We are at the coal face, drilling for oil, producing the oil, and delivering oil to the refineries.
Yeah, so right
That's
on
what
top
we
lah.
do.
That's why you call upstream, right?
Yeah, I believe so. Yeah.
So we have Dr. Ken here, founder. Also, I would say he is the first SPAC, Special Purpose Acquisition Company, that was listed on Bursa Malaysia over 10 years ago.
More than 15 years ago.
15
this
years ago
July,
now.
15 years ago.
Yeah, 15 years ago. So tell us a little bit about that journey. Like how did you start? Was it difficult? What were some of the challenges to get a SPAC listed back then?
I think the story of the SPAC, it was, in my view, something very, very exciting at the time that Bursa Malaysia and the SC came up with. It gave opportunities for, I would say, would-be entrepreneurs who were looking for money. And you must understand that at that point in time, and maybe to a certain extent today, the venture capital market in Malaysia is not that well developed. And at that time, again, I would say it was very, very, it was in its infancy.
Yeah.
So it gave us a platform to go out to the market and get some money to do something that we thought we would like to do. This particular industry, the E&P industry, does not come without risks. It is a risky business from a technical, operational perspective, and also there are quite a lot of factors outside your control, geopolitical factors like you can see now. And so we wanted to look for some money. We wanted to do something innovative in Malaysia. We were fortunate that the SC came out with some a structure, a platform for us to kind of explore. And after a couple of consultations with them, we kind of got the idea what they were trying to make happen, and we worked on it. And thankfully, 15 years later, we're still here.
Yeah,
I
and
would
the
say.
only one, right?
At the moment, yeah. There were initially 5, I think,
Yeah.
that kind of attempted this journey. But after 15 years, we are still,
The first and still here.
hopefully, keep
Well-
surviving. Hopefully, just keep fighting away.
I mean, bring us back to the point where you decided, I'm gonna raise money. And how much did you guys raise?
We raised 80 million US at that time, 83 million US.
83
exactly.
million US. So in
Yeah,
today's,
quite a lot actually.
It's a lot.
Because there were no funds that were mandated to participate.
Yeah.
So the money came from just over 3,000 high net worth individuals.
Wow.
So we had good support. Yeah.
And how difficult was? So bring us back to the point where you said, okay, I'm gonna go on this entrepreneurial journey, and I'm going all in.
I think it's not been just one step decision like that. It was an evolution of thinking, right? The first idea about oil companies for me, it happened when I was in the desert working in Libya. When in early days as an engineer, I think I was 24, 25 years old. So I was in the Libyan Sahara. I was looking at the oil field. I remember just looking at this oil field. And I was looking at the oil wells, and I was thinking of rubber estates in Malaysia because it was a massive oil field. And the oil wells were spaced 1 kilometer apart in straight lines. It just looked like rubber trees.
Right.
But all of these, as far as you could see, there were oil wells in both directions, and you just asked yourself at that point in time, how do you get something like this done in the middle of the desert in a strange country? How much money, how much technical know-how, the risk involved. I just used to just think, my goodness, how did all this get to happen? And obviously that made me start thinking about oil companies and how they were funded, and it was just, and the technical expertise, the risk to be taken. So that was when I had this idea that this was really a very interesting industry. Yeah. And that was part one, I would say. Subsequent to that, after at that time I was working for a company called Schlumberger. Today it's called SLB. After that, I left SLB Schlumberger after about 9 years. I joined Sapura. Yeah. And in Sapura, when I joined, it was a telco. But in 1 or 2 years, we sold our telco business. And we started an oil and gas services business. I was employee number one. We started it. Right. And we then built that to about 2008. It was quite a big company, Sapura Crest at that time, before the joint venture, the merger with Kencana. So that was step two, building a service company in Malaysia. That was quite a big service company we built. Then we went and we had an opportunity by I would say, good fortune. We found a company in India that required a turnaround. And we managed to take over that company, I would say, and turn it around and sold it off in 2 or 3 years. It was a very, very, I would say, successful venture for all those who participated in it. And then along the opportunity with Hibiscus. Hibiscus, there was an overlay of 2 or 3 things. One was the SC rules for SPAC, so you could raise money.
Yep.
The other was I'd done my doctoral thesis. My doctoral thesis was to answer the questions I first asked myself in Libya. How do you do one of these things? So my doctoral thesis was to research companies that started up as very small E&P companies, and then how did they grow? And that was an interesting journey because I got to interview a lot of CEOs of oil companies that had started up as small entities and then grown to larger companies. And what I found was it was quite interesting. I started off with one title for my thesis. It was Startup and Growth Strategies for Initially Small Oil Companies. That was my title.
Right.
But after I interviewed about 20 CEOs, I understood actually the most important part of all of their journeys, a common theme, was that there was a survival phase. After you start up, there seemed to be always this recurring story of survival. So I went back to the university and said, I got to change my title or my thesis a little bit. I need to have growth. It needs to be startup, survival, and growth strategies of initially small oil companies. And I focused a lot on the survival part because a lot of their interesting stories were about the survival stage. So there was a lot of wisdom in that, right? And wisdom that came from reflection, a lot of their reflection and learnings after their actions. And they were sharing it, and I was recording it, and I was thinking, this is what needs to be captured, not so much the honeymoon startup or the wonderful, successful, years and all that. That's not the learning. The learning for this is the survival part. So I wrote a lot about that.
Are you able to share one survival story that maybe you'll never forget?
From what I learned?
From what you learned, yeah.
Oh, yeah. I mean, mostly what I learned was this industry is cyclical in nature.
Yeah.
So you must always be ready to be contrarian. You must be able to take risks. You must be convinced that the cycle will come back. That's the first thing, okay? You must be convinced about that. And then you must be ready to be contrarian. So if everyone else is selling, you must think, is this the time to buy? If everyone's getting out, is it the time to go in? That is the kind of thing you got to be able to look at. And when you are taking risk, assume that, look at the worst case, okay? Can you survive the worst case? This whole investment needs to be written off. Will you still have enough money to keep the lights on? Something like that. But there was one or two who also said there are just 1 or 2 opportunities that come your way now and then, which is a all in or nothing type story. And then you got to just decide on your risk appetite, the views of your shareholders. So there were different views, and we've tried to, in Hibiscus, just do something that we think our shareholders can live with. That's how we've applied it.
So maybe since we're on the topic of survival, did Hibiscus also go through a
Yes,
survival
definitely.
stage?
Yes, definitely.
Did
I would say in 2013, 2014, we had just drilled a well in Oman, drilled a couple of wells in Oman, and we had made a discovery. The second well was a discovery. And when we drilled the well and we were planning for the well, oil was $100, $110, so not too bad. We had also bought some assets in Australia, and at $100 oil, they made absolute good sense. And in 2014, mid-2014, 2015, because of the shale revolution, I would call it, in the US,
Yep.
the oil prices started falling, and falling really off a cliff. You know, they were falling from $100 to 50. I think they went as low as $50.
Okay.
And suddenly all the projects that we had, I would say, were not economic. The ones in Australia became risky. And the one in Oman, we made a discovery in Oman. We realized that actually it's now, instead of taking the development and construction risk to develop that field, we felt, you know what, we can actually buy an existing field from somebody already in production, and we're not having to expose ourselves to all this construction risk in a foreign country. So we had to think very hard about, okay, let's reset. What we have done, write it off, and let's go and buy an asset with the same amount of money. Hence, we bought Anasuria. And looking back, it was really the right call. But it was at that time, I recall we took maybe 150 million ringgit impairment when we decided not to proceed with our exploration assets and move with buying an asset in the UK. So, yeah, it was some deep thought was required at that point in time.
What were the maybe bring us through that survival stage where you've invested all this, you had to write off 150 million. Was that pushing your company at would you at that point think, oh, we might not survive this?
There were days you were thinking, we are going to make a call here on the assets in the UK, and if we don't complete this transaction and the oil prices don't start to, we made the call that at $50, at $45, the oil prices had bottomed out, and most likely it would increase in price. And fortunately, this learning we had about these are cycles, and they will return. The market will return. So we were fortunate that it did right at the right time.
So we know that market moves in cycles, and that's very theoretical. But when you're in the thick of things, what was the emotions like to make that call?
I mean, we had a board that was supportive. We shared the load. I don't think it was like one single person saying we're going to do this. We just had to look at all the different variables and then decide, okay, this is the most logical thing to do. So I think these were serious decisions. We had to think through very hard. We had to look at the balance sheet to make sure we didn't get into a place where auditors would have concerns and all of that type of thing. So a lot of things had to be balanced.
Yep.
And I think hopefully now in retrospect, I don't say we made every decision perfect, but it's on the balance of things today. I think maybe we made one or two right decisions. Yeah.
Bring us back to when you talked about the SPAC, and you said no funds had the mandate to invest in the SPAC, and
Yes.
you had to reach out to over 3,000 individuals
That's correct.
to raise $83 million US.
That's correct.
Even in today's terms, it's quite substantial in the Malaysian market.
Yep.
Is that normal? Like what you guys went through?
I think being the first has advantages and disadvantages. Advantages is the fact that when you structure the company, you understand every reason, all the rationale behind each of your decisions. You really understand why you're structuring it in a certain way. Okay, your understanding is really deep, and maybe have to go into details that you would normally not go if you were just doing some cookie cutter exercise. Okay, but so that's the advantage. The disadvantages is we had to go and speak with a lot of people to tell them this is what a spec is, because nobody even knew what a spec was. It was actually the first spec in Southeast Asia, not just Malaysia, but Southeast Asia. Even Singapore hadn't got a spec. It was only Hong Kong and Asia that had specs, and Korea at that point in time. So it was not easy. We went to see all the funds, and the funds just didn't know even how to do a valuation. Are you fairly valued? So and many of them did not have the mandate to participate in such a structure. All of them, actually. We didn't have a single fund come in, except for one or two foreign hedge funds, which, to be honest with you, we were not very thrilled about. Hedge funds, when they come in, they can be a little bit kind of disruptive to some of your later exercises when you do it. But we worked through it, and we spent a lot of time on the road. We met a lot of people, and their decisions, high net worth. The definition of high net worth, I think, is 250,000 ringgit or something like that.
Okay.
So the minimum check they would have to write is 250,000 ringgit, and it was quite fun in a sense. We would meet people, and then they would not understand it too well. Then they'd bring some family member who probably understood it a bit more, maybe an accountant in the family or something. And then they would just say, oh yeah, okay, fine. And then after 2 or 3 presentations, you would get one check for 250,000 ringgit. And we had to raise a minimum of 150 million ringgit to be able to be listed.
Wow.
So it was a long haul, okay, collecting all these small checks. But we had a few people who believed in us and came in with larger amounts. So they gave us a platform to build on, gave us a bit of confidence. And thankfully, in the end, and there were 2 rules. One, you had to get to 150 million ringgit. The other, you needed to have a minimum of 1,000 shareholders.
Right.
There were 2 rules we had to meet.
Yeah.
So we were always worried that we might get to 150 million and only have 300 shareholders. So, thankfully, in the end, we managed to get through both.
Did you have a timeline to raise that amount?
Yes, we had about, I would say probably maximum, I think, 2 months. Because
2 months?
as people were giving us money, you couldn't just keep their money and not have a plan for it, right?
Right.
So I think it was raised in about 2 months.
2 months?
It was hell of a job.
Yeah.
It's not easy.
Was there any point in time where you thought, you know what, let's do something else?
No. It's one of those things where you just say, we believed in our structure.
Yeah.
We filled our structure with a lot of safeguards for people to kind of have an exit if they wanted. We tried to be as transparent as possible, and just did our best, So, but I recall at that time, we wrote down a list. Joyce, who was doing the work with me, Joyce Vasudevan, she wrote down a list. I think it was 8 sides of A4 on all the risks associated with our plan. We would not get regulatory approval. We would not find an asset. We would not find an asset at the right price. It would not be good value. It was an endless list of risks. But if you spend time brooding on that, you would never get anything going. So we just focused on, let's just move on and we'll be aware of it, but let's just work on getting somewhere.
And this was pre-AI, right?
There was no AI tool that time to help you. You had to do it, but you had to think it out, actually. Yeah.
I mean, thanks for sharing. It's really amazing. I mean, being in the exploration and production space, maybe for our viewers, like, what's going on with the Straits of Hormuz? Like, we hear a lot about it's blocked. We know gas prices have gone up. We know the average consumer now has less Budi 95, right? What do people not know about the situation right now?
The Straits of Hormuz is not anything new. The Straits of Hormuz has been a potential threat for the longest time. From the time I started in this industry, people always thought that the Straits of Hormuz was a potential risk, geographical risk. you imagine in your mind, let's just say you have a mental model, Straits of Hormuz, a one-way. It's not actually a one-way street. It's a cul-de-sac actually. It's a Jalan Mati, I think in Malay you call it, right?
Right.
It's a dead-end road. So this is a waterway that's a dead end. So you go into it and you come out the same way, in and out one way, okay? And in that road where you go in is where 20% of the world's oil supply comes from.
Yep.
And another 20% of our LNG supply comes from. And more products, byproducts, fertilizers, medical products, a lot of stuff. All of that in that
Jalan
area.
Mati.
And yes, in this Jalan Mati. And
Right.
there's only one way in and one way out.
Right.
And now somebody just comes and puts a barrier right in the front of your Jalan Mati and says, okay,
Yeah.
nobody's going in and no one's going out.
Yeah.
And to move all that stuff that's coming, going in and coming out of there, you have boats, over 100 vessels going in and coming out. And this Jalan Mati is about 30 kilometers wide,
Right.
okay? And all of a sudden, somebody just says, I'm in charge here, nobody's going in, no one's going out. That's the situation we have now. And it's been a risk that's been there for the longest time, but nobody really wanted to address it. In fact, we have been looking at this for a long time. We have been saying, all these years, oil price was $60, $65, $70 in this range. And the reason for that was many people said OPEC has shut in supply. So anytime there's a requirement,
Yeah.
it can open up a few more valves and there'll be some oil coming out.
Yeah. Yeah.
But the reality is all that OPEC shut in supply is all in one area of the world, okay, which is
Straits of
behind
Hormuz.
the Straits of Hormuz.
Right.
So it was a real kind of a false sense of feeling good. You were in a place where you thought, okay, I'm feeling very good because there's all this shut-in supply over there. But actually, it was all concentrated in one place. So that
Right.
geographical risk was pretty.
How much would you say the percentage-wise of that? Would you say all
It's
of it
20% of what we use every day.
every day, right?
Is behind that choke point, and it's gas and oil and fertilizers and all other kind of byproducts.
Yeah.
So it is quite a big amount. They have managed to find some routes to bypass some of this, and maybe the net amounts now are maybe 5 to 10% maybe of daily consumption.
Right.
But it is still enough to change the supply demand dynamics, in the oil price. Oil price is very sensitive. A million barrels here, a million barrels there changes the oil price a little bit. So
Right.
this has been like 5 to 10 million barrels net change in oil supply. So it is painful, I would say.
So coming to the mechanics of oil price. So what I understand is that, or maybe you can shed some light, is that on paper we see futures trading. That's paper being traded on oil. Of course, different types, different exchanges, and then there's the real world where you actually buy oil. Would you say that right now the actual traded amount is higher than what's traded on paper, or would you say that's what we look at paper is what's happening?
The futures are what the market predicts the price is going to be in.
Yeah.
Most of the futures pricing is 2 months from now.
Okay.
Okay, because it takes about 2 months for you to sell that barrel and for it to be delivered. So they kind of use a 2-month window. So I think today the futures is about $92. But probably what we call dated Brent, that is, if I wanted to buy a barrel of oil urgently today,
Yeah.
would probably be 100, 105 maybe. It'll be higher than that, okay? Then on top of it, there are premiums to be paid. I mean, Brent is just a base benchmark.
Yeah.
Depending on the quality of your oil, there are going to be, I would say, different premiums placed on these different qualities. So I think you got to look at where the oil is coming from. Malaysian oil, especially from East Malaysia, it commands a good premium.
Yeah.
So you may get $15 today as a premium to what is Brent.
Okay.
So if you sold a barrel today, you probably have what's called dated Brent,
Yeah.
maybe at $100, even though futures is at 92.
Yep.
Then on top of it, you've got your premium, so you are getting a little bit more than, a little bit more.
So actually I had one of those questions, and I am kind of jumping about, but we've got very different types of how do I say statements that have come out. Some say that Malaysia is a net importer of oil. Some say that Malaysia an exporter, which means that the amount we consume is either more than what we produce or less than what we produce. What's your view on that? You know, where are we actually?
There are two parts to this this conundrum, I would say. Firstly, there's oil and there's gas.
Yes.
Okay. In terms of gas, Malaysia is a net exporter. We are one of the largest exporters in the world. I would say the Petronas has done a fantastic job globally and has put us in a very good position in terms of the supply of LNG and has built the infrastructure, built a credibility in the world for delivery, for as a reliable supplier of LNG, and globally we are recognized in the top, I'd say top 5 or 6, I think number 5 in the world.
Okay.
And the ones all above us are all big names, the US, Qatar, Australia, and these are big suppliers, and we are there amongst in the top league. So as far as gas is concerned, definitely LNG, we're exporter. Oil is a little bit different. The reason is because we produce high quality oil, okay, high quality, both in East and West Malaysia, very good quality oil. And these oils command a premium when sold to the right refineries. So we export these high quality oils. Okay.
Yep.
We need in the country a lower grade of oil.
Okay.
So we import those lower grades of oil. And so we are importing those for our refineries.
And is that mostly sourced from
overseas.
the Middle East?
Yeah. It's
Straits of
mostly,
Hormuz?
Yes, Saudi Arabia and now different other places as well.
Okay.
So we are getting this type of oil, and we are then refining it here, and much of it comes to be used here. So and we're doing the right thing for our economy, because we've got something of premium grade. We sell that to where it commands the best price.
Yeah.
We then buy what we need for what we use here. So I think gas, yes, definitely net exporter. Oil, it's a little bit more complicated, because you got to see what the refineries are taking for our own use, and then they are re-exporting some. They might be re-exporting to Singapore for use in the marine industry. Okay. So there are all kinds of different things, but basically maximizing the position for the country.
So would you say, could we be dollar exporter but then volume importer? Could that be possible?
We are a dollar exporter and a dollar importer too, because we are also buying oil for refining here.
Correct.
At also the higher prices today, right? So So it's there's no big huge advantage on that. Okay. So
So in terms of oil, would you say by volume, would you say that we Malaysians consume more oil per day or in a month than what we
very
export?
likely we are most likely doing that. Yes.
We're net consumers now.
I think so, net consumers. Yes.
So this was one of the questions that was
as
posted.
a country, not as individual.
So we have one question. So we export higher value crude.
Yes.
Like tapis. Is Hibiscus one of the?
We are selling from East Malaysia, and we are selling from West Malaysia, and we are selling high quality crudes.
Is that called tapis, or are there any names?
It's also called MCO, Malaysian crude oil. I mean, so we
different
have
grades,
we have Labuan crude oil. We have different, but all of them in that category of premium qualities. Yeah.
So what would so I guess one of the questions that was posted was, at what point will we say that we will start refining these oils, more expensive one, for our own consumption? Will there be a point?
I don't think we need to do that. The important thing is to have access to oil, which is a valuable resource.
Yeah.
Once you have that, you can barter it with whatever you need. Yeah. Right. So you're dealing with a commodity. Yours is a little bit better quality than somebody else's, and that is adjusted in the price mechanism.
Sure.
So we don't need to suddenly go and say, because we produce it here, we need to have our own refineries doing it, because it might be that our oil is just best used for jet fuel, for
Yeah.
example, for aeroplanes.
Yeah.
And we are not going to use all the oil we have for aeroplanes, for
Yeah.
example.
Yeah.
So we use what we need in country, and then we sell what we don't need, and we refine it in the most logical place to do that. And we also refine what we need, and we do what is good for us here, and we refine what is good for us here. I think it's important also in a particular geography to make sure that you have refining capacity to handle the different grades that are in the region. So this is more like a regional play. Pointless for us in Singapore, for example, to have refineries that have the same type of refining the same type of oil. It would be pointless, actually.
Why is that?
Because then we are all trying to compete to buy the same type of feedstock
I see.
to refine. So it's better that we complement each other
Right.
rather than compete with each
Does
other.
that happen right now?
Yeah. I think we naturally, when people do it, they look to see where the gaps and build refining capacity where there are gaps.
Okay. So in terms of now you talked about refineries. Would I be correct to say that once a refinery is built to a certain spec, it can only take that spec of oil, or is it variable?
It can be changed, but it will not be something that you want to do too often.
So
Yeah.
it's okay. So you can change
You
it.
can change it, but it would not be something you want to do. Yeah.
Okay, because it's expensive.
It'll be expensive. It'll involve a lot of shutdown and reinvestment again. So I think you want to think hard. These things are things you do for a long term. Yeah.
So in terms of our existing refinery capacity for our own consumption, where are we getting the oil from, and what kind of?
I think there will be
substitutes?
multiple. I think there will be multiple sources.
Yeah.
What you must understand is that, again, Petronas is in the Americas, it's in South America, it's in Canada, it's in Turkmenistan, it is in this part of the world. They are able to swap their oil actually for and they're doing trades, okay,
Right.
at a global level, right?
Sure.
So their access to feedstock is it's something secure. They've got something to change that people want. So
Okay.
you can say, I'm selling you this in the US, can I take delivery in Singapore or in Johor? You can do all kinds of things like
Sure.
that.
So
There are-
would you say that the situation where we're in today, with the war that's happening in Iran, do you think we will ever have consumption or shortage here?
I don't want to say that, but what I would say is this, because I don't have access to the figures.
Yeah.
But what I should say is this, okay? I think the people who are managing this, who have got access to data, they are very experienced in what they're doing, and I think they will keep the country safe. I believe we are in very safe hands.
Okay.
I very strongly believe that.
Because it's a good point that you mentioned about Petronas. That we keep thinking Petronas Malaysian, but yes, it's a Malaysian company, but they're all over the world. They're a global company.
They are very global.
Yeah.
Yes.
In that sense, that allows some sort of energy security. Would you say?
I believe so, because
Yeah.
they're in Canada, they are in South America,
Yeah.
they are in the Turkmenistan, and these are all big assets for them.
Yeah.
They are doing big projects in Malaysia, so I think very diversified portfolio in many parts of the world.
Yeah.
So the geographic risk is spread as well. So I think it's just very well managed. Yeah.
Right. Oh, thanks. I mean, that was a great point. So you talked about your business. I mean, obviously, Hibiscus would be affected, or to a certain extent, more affected than most, positively or negatively, by oil and gas prices. Right. So how do you guys manage that?
Firstly, we have a base price on our budgets every year are based we decide what's going to be our base price to kind of do our projections.
Okay.
Our cash flow projections, our investment decisions are all going to be based on a certain price. Now, when these spikes happen, there's no knee-jerk reaction. We just say we try to accelerate a little bit more what we are going to do if we can. We never take this to be a long-term, these prices can go up and go down. The market is extremely volatile. So it's not something that we are kind of counting on. So it's our base numbers that are important. We deliver our base numbers, companies in a good place. Anything above that, companies in a very good place. So we look at it that way. And we try to be, I don't want to say pessimistic, but I would say try to be realistic about what the prices are going to be for the year. We then make all our projections on that and our investment decisions on that. When things like this happen, of course, we try to see what can we do now to ensure that 2027 and 2028, if things were a little bit softer, how do we prepare a platform today that will help us out in 27 and 28? I think that's really what we're doing.
So forward. So just curious, I mean, beginning of this year, the war broke out February 28. What was your projections for 2026 early this year? What was your base? And how has that, changed?
Yeah, so our projection was $60 oil for the year.
60, okay.
60. And we had our business plan approved by the board on the third week of February.
Very
so
timely.
We had been working on it for about 4 months.
Yeah.
Kind of sharpened our pencils, got a good business plan in place, and decided we are going to go with this one. Presented it to our board over 2 rounds, early February and mid-February, and then got it approved in the third week of February. And then a week later, it all became kind of like, okay, this is something it's a good base, but let's see now whether how can we take advantage of the situation.
Yeah. So how has that changed? So 60 beginning of the year. What's the feel like? I know we can't predict the future, but what's the base looking like for?
We've got several scenarios. I think we have presented if you look at our quarterly results, the presentation material, we've looked at some of the stuff consultants have provided, companies like Rystad, and they have different oil price projections depending on the duration of the war. They had if the war lasted 2 years, they had a certain price projection. If the war lasted 4 years, and how the year would go, kind of thing. So we're now 3 months into. If the war lasted 3 months.
3 months.
2 months and 3 months.
Okay.
Yeah, sorry, beg your pardon.
That's
so
right.
if the war.
I was going to ask you, what was it like in 2 years, right?
No. If the war lasted 2 months, beg your pardon, what would be the price projection for the year?
Yeah.
If the war lasted 4 months, what would be the price projection for the year?
Yeah.
So we are now into 3 months of war, and there are certain projections what the price might end up for the year, an average price would end up for the year. So we look at all of these data points, and we still kind of maintain that in the long run we'll still be at 60, and we'll just keep going. And this is just a phase. Yeah, a little phase that we have to go through. Yeah.
So, I mean, do you have that number top of your head? If it's 2 months and 3 months?
I think the price is somewhere between $75 and $85.
75 to 85.
Range.
Okay.
That would be a kind of an average price for the year. Yeah.
So if everything is kind of status quo and no wars or anything, we're looking at about 60.
If there was no war and the vessels were plying in and out of the Straits of Hormuz, then I think you'll be back at 60, maybe 65 for a while. Yeah. But it'll take us a while to catch up with that, because there's a lot of oil being drawn from reserves all around the world. People will want to replace that. You also got to think that the countries in the Middle East, they've spent a lot of money on defense, equipment and all of that sort of stuff. They can't afford a low oil price. They're going to have to rearm a little bit. There's going to be all the time a concern in the back of their mind that they've used up all their defense stuff and all that kind of stuff. So they're going to need to afford all of that. Are they going to be able to afford a $60 price environment? Then you've got to think of places like Qatar and some of the oil facilities that have been damaged.
Yeah.
How much damage? No one has really come out and said, okay, this is going to be down for such a long time. So how much production has really been curtailed for a period of time? We
Yeah.
don't know that too.
Yeah.
So there are a few uncertainties out there. So I think there will still be some factors that drive that keep prices a little bit higher than 60.
Longer than expected.
Longer than expected, yes.
Okay. Would you have a
No, I have no idea.
which you wish
No.
point your finger? Because we've seen some analysts saying that you probably remain elevated. Say if the war stopped today, probably till end of this year at least for stocks to.
Yeah, we've seen all of those reports, you know,
Yeah.
but at the end of the day, when you are running a company, you got to be sure that you make your own decisions,
Of
because
course.
finally you're going to have to, you take all the data points, but you got to decide, what are you comfortable with?
I mean, really, these are because there's so many variables. It's actually quite hard to predict.
Yeah.
Am I right? So you talked about reserves. So this is something that's kind of curious for me, for the viewers as well. When governments come and say, "Oh, we're gonna come up with reserves. Don't worry. We'll keep supply going." Where are these reserves actually held? Do we have reserves in Malaysia, or where are they stored? Right, and if oil prices remain low for a long time, does the oil just being kept there for many years? How
Yeah.
does that work?
So you have, I think this whole idea about reserves and energy security, this came out after the 1973 war. And in 1974, this agency, the International Energy Agency, was set up by the OECD countries. And they were set up, in fact, to provide strategies and assistance in precisely this type of situation. Okay, help countries have a little bit of energy resilience. So they then came up with an idea who's going to contribute what and store reserves where, and mostly the larger economies which could afford it started keeping reserves.
Like the US?
US, some countries in Europe, Japan, China.
Yeah.
These were the countries, the big economies kept some reserves. The smaller economies, ourselves, Singapore and all that, we just kept enough for us to kind of keep going for a certain period of time, but not really strategic reserves. I mean, you got to differentiate between what I call operating reserves, what you use, because
Right.
you need to keep all your refineries and plants and all that fed. And then you got strategic reserves, which you keep and you don't touch. They're your savings, your
So it's
EPF.
basically your so your
Like
current
your
account
EPF,
versus your
yeah.
EPF.
Your current account versus your EPF. Okay.
Right, okay.
So these your strategic reserves are equivalent to your EPF. So you're looking at that, and you have these countries which keep them, and then they buy and they refill, or they keep these reserves at a point in time. When the oil prices are low, they will buy. China was buying all of last year, built up strategic reserves of over 1 billion barrels. And now they're selling at a
Premium.
mega premium. So it's not something that is without that. It is something that could be profitable,
Yeah.
but you need to have holding power. Okay?
Yeah.
So the same with the US. So they sell when the markets are hot. Are short, and they want to bring prices down a little bit, so they will allocate certain barrels to certain trading companies to dispose of. So I think this is what has been going on. So the statistics on all of this comes from agencies like the International Energy Agency in Europe, and also the Energy Information Administration in the US. So they kind of track what's happening here in these strategic reserves, and it's also an input into what's happening to oil price, because oil price, they look and see, well, how much is there for how long, kind of thing, and are we getting into a tight situation?
Are those numbers transparent to the average person?
At the estimates, people have estimates, but
Yeah.
really I think the exact numbers are not
Nobody.
known. Yeah.
Only a few people will know.
I think I think many people will have part of the picture, but not many people have the whole picture. Yeah.
Do you think that's done on purpose? That
It possibly is because I mean no one would really know what is the exact situation in China or in Singapore or in Germany or in the US or in the
Yeah.
UK. No one know exactly, but
Right.
there would be some places where this is kept.
So would you say that so would Malaysia have an EPF equivalent, strategic reserves? Like, do we have storage facilities?
I believe we have some, but not
Yeah.
as much as China, which has maybe 100 days or something.
Okay.
We have some, yes, of course.
Oh, 100 days is a lot. So
I mean, when you think that China is using, 15, 16 million barrels of crude a day?
yeah,
So if they have 1.5 billion barrels, it's only 100 days.
yeah, right.
Yeah, so, yeah.
What would you estimate Malaysia to have?
I have no idea.
No idea.
I have no idea.
So I mean, would a company like Hibiscus, once you extract oil, do you store it for some time, or what's the mechanics? like?
We store it to sell, and we're selling at 300,000 barrels. Every time we have 300,000 barrels in a cargo, we sell it off already.
Ah, okay. So it's extracted with you
We
fill up the
store it
ship.
for a little while, a ship or a tank onshore,
Yeah.
and then we sell it every time we have what we call a parcel size that's economic to sell. Yeah.
So what's the size of production per day for Hibiscus today?
Oh, we have two numbers, what is gross and what is net.
Okay.
Gross, we are about maybe nearly 100,000 barrels a day,
Yeah.
barrels of oil equivalent a day, so oil and gas.
Yeah.
We had about 100,000. Net to us is about 27,000. So when we say gross, it means this is oil that we operate and we produce on behalf of others as well,
Okay.
other partners. Yeah.
Okay. So which means that because you have other partners in your production sharing
Yep, yep.
contract, and that's why it's 100,000. So what's the future looking like for Hibiscus? Is higher number?
We have an objective to get to 35,000 barrels of oil equivalent by the end of 2026.
Okay.
We are at about 27,000 barrels of oil equivalent today. In the next 6 months, this number will go up to about 35,000 barrels of oil equivalent. And then over the next 5 years, up to 2030, we hope to take this number to about 70,000, of which about 50 to 55,000 barrels of oil equivalent will come from opportunities already in hand with the company
Okay.
that we have to invest and develop over the next 4 or 5 years. So we will be looking after the decline. I mean, oil fields decline every year. So we'll be looking at how to arrest that decline and enhance production. And we think from our projections we can get to from where we are today to about 50,000 barrels of oil equivalent by about 2030. And then from new opportunities, potentially an acquisition, I don't know. But there is a question mark over the last 15, 20,000 barrels of oil. But we have set ourselves what I believe is called an impossible target. But,
Okay.
you just set it out there and you just go for it. Yeah.
So take us through oil production. Maybe for the average viewer here who's not in the oil and gas space, can you just shut it off? Is it easy to is it like a tap where you open it and close it? I know it's very overly simplistic, but how do you manage, when oil prices are low, do you slow the tap down or maybe just shut it off and wait?
No.
Yeah.
You don't normally shut it down unless you are part of a group like OPEC or something like that, and you're given quotas, and then you don't really shut it. You might what we call choke back. You kind of reduce it.
Okay.
You kind of in a controlled way you reduce it. It is easy to shut. It's not easy to reopen.
Okay.
I can tell you that. So we don't at Hibiscus level. No, we have never been given any quota to follow, and we just in economics. I would say microeconomics is about maximizing revenue as a company. So we maximize revenue, we maximize profit. So we are not and we can't fix price. So we have to just go with production. We maximize production all the year round as much as we can.
Regardless of oil price?
Regardless of oil price. We just maximize production. That's very important for us.
Okay.
And we just deliver on our production targets. The idea is the more production you have, your unit operating costs drop. So that's important. So your margin should increase a little bit, okay, if you can increase your production. So we just work at maximizing production. So all the time, as a small company, we are maximizing production as much as we can.
So is there will there be a point where, say, price per barrel sells for lower than you can produce it? Will there be a point where it costs?
Yeah, it's theoretically possible. So what we do is there are different tax regimes in different parts of the world. Okay. So in the UK and in Brunei, for example, we have concession systems. And in concession systems, it is possible that you can get into that type of situation.
Okay.
Then you have production sharing contracts. Production sharing contracts, you're compensated your costs first by the government, actually, in Malaysia. By the owner of the resource. Here it's Petronas. So you're compensated a certain amount of costs. You can recover a certain amount of your costs, and all your costs all in one go. There is a way you recover your costs. So you recover your costs, and then after you recover your costs, then whatever you have as a profit, you share with the government again, or in this case, Petronas. So we have different tax regimes working in different parts of the world, and by spreading our risk this way, we hope that has a portfolio of assets, we are able to keep our lights on, irrespective of oil price.
Irrespective of oil price.
Yeah.
So is there are there any hedging strategies that at Hibiscus you employ?
At this point in time, no. Only because our gearing ratios are very, I would say, reasonably low.
Yeah.
So we feel that we are able to manage our debt levels, and we manage our debt repayments and all of that, our debt obligations. So we don't really have any debt hedging strategies in place.
Okay, so you're very comfortable.
We're happy with where we are.
Okay, so I know it sounds silly question, but please bear with me. So when you produce oil, is it a perishable product? Does it go bad? Or is there a specific amount of time you can keep it for?
Oil has been underground 50 million years. So it's taken 50 million years to get that molecule of oil, ready.
Sure.
Yeah, so I think, it doesn't perish.
So the older it gets, does it get better?
No, I don't think so. It's not like certain alcohols and all of that. No, not like that. But you got to look after it carefully, because it is a volatile substance, which means that it can evaporate.
Right.
It can kind of, so you want to be sure that it's properly sealed and managed, but no, it's not. Doesn't have a use by date or sell by date. Yeah.
No, actually, I mean, since we're on the topic of oil and gas, what are your views on now it's a big thing, everyone's talking about it, subsidies for fuel, right? And being in oil and gas, I know it's a policy decision, but how do you think subsidies are good? Like oil subsidies are good for us, like as a developing nation, or?
I think historically, subsidies have been a policy by the government to share the benefit with the people.
Being an oil producing nation.
We have been blessed with a resource in the ground.
Yeah.
And I think the government has had policies to have subsidies to share that benefit with all the people. So they really feel it, that we've got this, we're blessed with this resource. It's a national resource. It's a collective benefit for everybody, and we are giving you a little bit of a subsidy so you can use this resource. And I think that's historically probably been the thinking. Okay. And as long as we were a net exporter, I think that is a good thing, because people really benefit from it. As we move on, and if we get to a point where we are importing a lot of oil, then the reality that it is a scarcity has to be kind of felt by everyone.
Sure.
So I think the policies that the government is implementing right now, where they're slowly I would say, pulling back a little bit on some of the subsidy, the effective subsidy they are providing people, I think is the right thing, so that, you know, we all have a reality check as to what is happening, and they're giving us a kind of a soft landing route. It's not something overnight saying tomorrow no subsidy.
Yeah.
So government is slowly kind of taking us through steps to transition into a world where maybe one day we are not fortunate enough to be subsidized in this area. So I think it's a good thing.
So being net exporters, net importers, importers, you know, eventually it would be.
It's something that is scarce to the country.
Yeah, it is
a foreign. It's going to affect your balance of payments in the country. It's going to affect a lot of the eventual monetary policy of the country. So it's something the government is just saying, everyone, please take care. This is something which drives some of the other policy decisions. And we also have to understand that the economy is almost a zero-sum game, because if I'm putting money into a subsidy here, maybe I'm not really able to spend so much on education. I'm not able to spend so much on hospitals, universities, many other good things that we also would want to have.
Yeah.
So it's a balancing act, and it's also we have to be weaned off the subsidies we have got before.
Yep.
So the government has got a very tough job to do. Yes.
Okay, I think we've covered quite a fair bit here, and I think maybe for the there's been a lot of talk about Petronas and Petros. So, as a average Malaysian, what is the difference, and you know what's do they complement each other, or do we now have a kind of a duopoly situation?
I don't really think it is. I'm in the position to comment on that. But what I think is important is the country must present a good investment case for foreign companies to invest in the industry here. Anything that threatens an investment case is not helpful. So I believe that oil companies are able to go to many countries in the world and they can decide on where they wish to invest.
Yep.
Malaysia is a very attractive investment destination.
Yep.
So I feel that if we can, as long as we are as unified and consistent with our rules, I think people would find it attractive to invest here. So I think whatever, we shouldn't look at it as there being differences. We got to find complementary positions so that everyone can work in the best interest of this industry, actually.
Right. Okay. So, Dr. Ken, lastly, what is your vision for Hibiscus in the next 10 years? Do you still see yourself in 10 years' time doing this?
I hope I'm not the one you're interviewing in 10 years' time, because we have such a good talent pool of managers in the company.
Right.
No, I think, firstly, Hibiscus, we work in 5-year plans. It's a volatile world, and we're in an industry which is subject to a lot of geopolitics and all of that. So we kind of take it 5 years at a time. And so we've got a 5-year plan to double our production, scale up, and be a trusted partner to governments in this region, particularly. We are working hard in Brunei, we are working hard in Malaysia and in Vietnam. So just building up those relationships. So I think over the next 5 years, we hope that will be enhanced. And eventually, you just want to be able to contribute positively to the economies of all these countries.
Yep.
You want to contribute to the communities that in the areas we work in. And if we can achieve that and just be a responsible corporate citizen, I think we will have fulfilled our role, actually. So given where we started from and where we are kind of trying to move towards, that's all we're trying to do. And we're in a place where we are not in control of our revenue.
Yeah.
We are only because price is not set by us.
So you're price taking.
Yeah, we are a price taker. Yeah. So we can't control our revenue line. So we have to make sure that our competence, our discipline, being innovative about how we do things, being agile. I always keep telling the team, however big we get, we have to be agile because the market is so volatile, you know. The only friend volatility has is agility. And if you're not agile, then you are going to be frozen in a volatile world. You're going to be frozen out of a volatile world. So we are trying to just maintain that agility. We are working on many of our processes, using. We have started initiatives now to use whatever technology we can to make ourselves even more flexible, and at the same time keep the governance and controls in place. So that's what we're trying to do, just build a strong platform. And one of the other things we've been trying to do is, it's a difficult thing to do in Asia. In Asia, traditionally, companies have large government shareholders or they have large family holdings, right?
Yes.
Hibiscus is a company where the largest shareholder, there are only two shareholders above 5%, and both have around 10% of the company. It is, and there are no controlling shareholders. So everyone is a minority. And this is the type of structure which we think is the way to manage companies professionally. In other words, you just set up a professional management, you set up a competent board, and you try to manage the company, and no single person makes a decision for the whole company. Yeah. So that's what we've been trying to do all the while.
I think you've definitely achieved that, because you're right. I think in Malaysia, if you look at shareholding structures, excuse me, there's typically one major controlling family, and they're also in the business.
Yep.
So that's why there's always a small portion of minority shareholders which never get involved in the business.
Yes.
So it's very much how would you say you're one of your very unique setup in Malaysia specifically, or maybe in even Southeast Asia?
We think there are just a handful, if there are even that. Yeah. It's not easy, and it's not easy because when you go for financing, people will always ask who's going to provide a guarantee, and we say we have none. That's what we have is what we have. So it kind of promotes different types of discipline in the company.
Yeah.
So we try to keep that is something we started with as a objective in the company, that there would be no controlling shareholder, and we have tried to maintain that type of structure. But it might be that in the next few years of the company, for it to scale up to different size, maybe you need to bring in some larger shareholders. It might not be
a substantial shareholder.
Maybe, yes.
Okay, or a partner lah.
Yeah, correct.
Partner. Okay. Thank you again very much
Most
for
welcome,
spending that
Alvin.
1 hour with us.
No problem.
It's always great seeing you.
Nice seeing you again, Alvin.
Yeah,
And thank you for your support as well.
Yeah, most welcome. And thank you for coming and spending
Most
time with us. And for all the viewers, this is our podcast with Dr. Ken, founder and group CEO of Hibiscus Petroleum. Thanks again. Bye-bye.